Welcome back to Everything Marketplaces, where we talk with founders and leaders from some of today's top marketplaces. So this is episode 87, which is a really great group chat that we just had with Loren Straub, who's a partner at Bowery Capital. So Bowery Capital is an early stage fund that's focused on investing in B2B marketplaces with a portfolio that includes the likes of Zeus, StreetCred, Reibus, and more. So prior to Bowery Capital, Loren was at Groupon, so she also has some really great experience on the operating side. So this is a really great chat with Loren. We got to learn more about what investors like Bowery Capital typically look for in B2B marketplaces that they invest in, characteristics of great B2B marketplaces, some unique insights from investing in them, and also had a great group Q&A for those on the chat. So I really enjoyed this conversation, and I know you're going to find it a great watch to the end. So Loren, welcome to the group chat. It's definitely great to have you join us here today. So I've heard great things about both you and Bowery, so I'm really excited to have you join us and dive into B2B marketplaces with you. Before we jump into things, so I think it might be great if you can start off by sharing a little bit more on your background, for those who don't know you.
Yeah, sure. Hey, everybody. It's very nice to meet you all. Super excited to be doing this and look forward to staying in touch after this as well. I can quickly run through my background and try to keep it mostly kind of relevant to what we're talking about here. But I started my career in investor relations. I was working for Activision Blizzard, the video game company, recently got acquired. And then from there, I actually transitioned over to Groupon. I joined them pre-IPO about a year and a half prior to going public. And that was probably my first real experience into marketplaces, certainly on the B2C side. And I set up their initial investor relations department, but also spent a ton of time on like the operational finance side of the business. So this kind of marketplace concept was like quite new when we were at Groupon. And so like people were trying to figure out how to forecast the business. And, you know, I spent a ton of my time dealing with like, how do we message and teach the street how to value marketplaces, what metrics matter when it comes to marketplaces. So that was kind of my job, was like, there were a bunch of kind of, sell-side research analysts who were getting ready to, pick up coverage on Groupon as a public company. And like, it was very important to us that we messaged to them how to think about the business, because it was like it was a very new concept at the time. And during the IPO process, you work with investment banks. One of the banks we worked with was Goldman Sachs. So I got to know the team that we worked with very well there. And after like about a 3-year stint at Groupon, I ended up joining Goldman Sachs on their investment banking division, covering all technology, largely marketplace businesses, both B2C and B2B. And so then I spent like 2.5 years at Goldman Sachs. I started based in the San Francisco office, moved to the headquarters in New York City. And then I left there in 2016 and joined Bowery Capital, where I've now been here for about 6 years. And do you want me to jump in and talk about Bowery? Is that relevant?
Yeah, that would be great. So
okay, cool.
An overview of it.
So Bowery, we're a B2B software and marketplaces investor. Everything we do is B2B, so I don't touch anything really that's like directly interacting with consumers. And everywhere, our initial checks are always investing at the seed stage. We certainly do kind of our pro rata and follow-on rounds, but we want to be like one of those initial checks into the business, or at least institutional checks. We're a lead investor, so we take a very thesis-driven approach to the opportunities that we look at and the deals that we ultimately invest in. And in addition to investing, we have this acceleration team, which works exclusively with our portfolio companies between the seed and Series A stage. And the goal for that team is just helping our companies ultimately generate more revenue more quickly than they otherwise would. So how does that break down in practice? It's really like a large part of it is around go-to-market strategy, pricing, negotiations, refining your funnel. Like we know that the seed Series A stage is about trial and error. We try to help prioritize that list a little bit in terms of what we might try. on the go-to-market side of the house. And also we help with that transition from founder-led sales to building some kind of repeatable model that we can also then hire people. So the second part of our team is like a recruiting people and talent and sort of benefits function. That's also going to help source candidates for you, screen candidates, talk to you about benchmarking, think through compensation. It can get kind of tricky in the early days when you're thinking about fixed and variable and equity comp. And so it's just a resource there as well. So that's maybe like the highest level on Bowery. We have, I'd say in the last, well, our first marketplace investment was in 2013. We invested in a company called Transfix, which is going through a SPAC process right now. But along the way, we've made quite a few additional B2B marketplace investments. I'm happy to talk to you more about those, but I'll stop there, Mike.
Yeah, that's a great overview, and thanks for sharing with us. Yeah, so I would love to learn a little bit more about, what you specifically look for in B2B marketplaces that you invest in.
Yeah, so maybe just like to set the stage, I would say like at the highest level, obviously marketplaces by definition are sort of matching supply and demand. Everyone on here knows that, and reducing some kind of friction from an existing process. But most of the time, particularly in B2B marketplaces, which is where I'll probably spend the bulk of my time chatting today, I'd say the most successful marketplaces tend to have all of those things I mentioned, but also there's much more that I look for. And so I guess maybe before I get into exactly what all those things are, just in terms of like the types of B2B marketplaces that I like, I try to like split them up between there's like these services or labor marketplaces. So like things like Rig Up, right? So it's people based. And then there's like wholesale marketplaces. So like Fair would be a good example of that. They sell retail goods. There's usually that model is like removing middlemen from a process a lot of times, streamlining of purchasing or, creating broader access to products, that kind of thing. And then there's like more industry specific marketplaces, and you see a lot of these in the Bowery Capital portfolio. This would be something like you may be familiar with a recently gone public company called ACV Auctions. That's a marketplace for like car dealers to buy and sell used cars. We are invested in a marketplace called Reibus, which is a marketplace for buying and selling like industrial materials, like raw industrial goods like steel. And in these models, it's usually more about streamlining a traditionally offline process, usually consisting of brokers and or like some kind of RFP process to, facilitating transactions, bringing it online and reducing a lot of the friction in the process. So that's kind of how I think about it. It's kind of like the labor, the wholesale, and the industry specific marketplaces. Now, I guess like in terms of what I look for, your actual question, I will evaluate kind of all three of the types of marketplaces. The basic framework I like to use, like, let me see if I can talk to you through it at a high level. But first, I look to see if they offer both sides of the marketplace an experience, some sort of an enhancement or convenience that just simply wasn't possible before the marketplace existed. A lot of times in B2B, it comes down to like technology and actually using that to make a significantly better experience and sort of change how people did business in the marketplace before your marketplace existed. So a classic example here is just taking any market that was doing business with phone calls, emails, fax, and putting the entire workflow online. So I think that's important. Next, I usually like to see some kind of margin improvement or economic improvement. Like ideally, it's on both sides of the market. You often see this in those marketplaces I talked about that are cutting out middlemen or brokers from the process. Like that's oftentimes a lot of the value add. And then I also put a lot of value not just on like facilitating a connection between the buyer and the seller, but just some sort of additional value add that's driving both parties to use and prefer this marketplace over the alternatives. So it's totally different depending on the marketplace. I think a big one I've seen here a lot is building some kind of like trusted platform and brand. So with Reibus, the industrial materials marketplace we're invested in, the marketplace is anonymous, meaning buyers don't know who they're buying from, sellers don't know who they're selling to. Everyone essentially feels like they're doing business directly with Reibus. And so what Reibus has had to do is like, they're kind of on the hook for the quality of the product that's going through their marketplace, but their stamp of approval has gained them so much trust and respect in the industry. And so like their kind of continued promise on quality and delivery has actually, ultimately made them almost like a more reliable partner to work with than transacting in like the old way. So that's another thing I like to see. I think another frequently seen kind of value-added marketplace is anyone who's also handling like the fulfillment and delivery of goods. This is all going back to the theme of like somehow improving the overall experience, making it more enjoyable. A few other like common value adds we see in the B2B marketplace side. A lot of folks are building some element of like workflow software, like inventory management systems or productivity tools, which can help just streamline or simplify these like more complex transactions in some way. I'd say more recently, a thing that's been coming up a lot in our portfolio and outside of it is offering some kind of financing element. So a lot of, like allowing sellers to get paid sooner or buyers to borrow money to make purchases now or in the future. These tend to be super sticky products, and there's a lot of complexity behind rolling out something like this. And I think there's some like points from a scaling and traction standpoint for when you should consider these things. But that one's just been very top of mind, really in all of the marketplaces that we're invested in right now. So I think it's definitely something it's just timely, mostly because like there are technology and people building infrastructure that you can implement a little bit more easily than building these things yourselves now for like the first time ever. So I've been rambling for a while, but hopefully that gives at least some helpful context for how I think about these things. And I'm welcome any questions along the way. I don't know how you like to format these, but I'm happy to chat.
Yeah, no, that was really helpful, and thanks for sharing the example of Reibus. It's a really great example of a B2B marketplace that's actually come up here in the community. So going a little bit deeper on that though, as a specific example, as a portfolio company, what stage did you maybe come across them initially, and then commit to investing?
Yeah, so I met them they were kind of a seed stage company raising funding. And I got to know the team really honestly over like a 2-week period. But I had a prevailing thesis on exactly what they were doing. So I had spent a lot of time thinking through these new kind of procurement materials marketplaces, specifically in like highly legacy industries. And probably one of the biggest parts of my thesis behind any of these is if you're picking a specific vertical, that founding team needs to have lived and breathed this industry up until the point where they're building this marketplace. So John, the CEO, and a few of the other members of the team all spent their entire career in steel, buying steel, selling steel, producing steel. Like there's a very long supply chain in steel, right? There's like US Steel at the top. There's all these middlemen between, and then there's like the ultimate consumer of that steel. And so they have sat on basically every level of the supply chain and understood basically all of the friction points. So that was very, very important to us. And so we led their seed round. They're based in Atlanta. And so I flew down, met the team. 2 weeks later, we signed a term sheet. And that was, I think that was in 2019. I think that was end of 2019. They raised a Series A about maybe 9 months later. And then they just raised a Series B led by SoftBank, which was like a $75 million round, 675 pre-money valuation. So they've done quite well so far, but there's always a lot more left to execute on.
Yeah, certainly sounds like an incredible team. So
They're great. Yeah, it's been a really wonderful one to be on the board of and just get to know. And honestly, like I think they really helped me hone my thesis in terms of folks that I'm looking for.
yeah, yeah. So you did kind of mention, the stages you typically invest in. What are some kind of, I guess we could use like kind of ballpark, benchmarks and kind of milestones that you look for?
Yeah, so I mean, we're a seed stage investor, and I think today that can mean a lot of things to a lot of people. So I'll try to clarify that for the folks on the line. But we invest in anything from one or two individuals with an idea to some semblance of a V1 of a product, maybe some early, design partners or POCs or pilots or whatever you want to call them, kind of utilizing your product. And so we certainly don't have like revenue targets or revenue minimums that we require. But you can see anything that we've done in the portfolio from that kind of idea stage up to, and those tend to be more like call it $1 to $2 million fundraise amounts. And then some of these later stage seeds are more like a $4 or $5 million round. And those are the ones that have a bit more traction behind them, are a little bit closer to scaling. They probably have a few more members of the team, and they certainly have a bit more in terms of like customers and product built.
Yeah, like that's great. Yeah, so I had a specific question for you, actually, kind of off the back of that, which is, I guess like, do you have a preference as far as like demonstrating take rate, and at what stage you like to see that a B2B marketplace can demonstrate that?
Yeah, so I don't know if we've been lucky here, but I have struggled with marketplace pitches where they say we'll figure out take rate later. Basically running at like 0 or negative take rates. To me, it's just sort of kicking the can down the road in terms of when you can validate if there's real product market fit for your marketplace to exist. I mean, like, you can kind of, what is it, sell $1 for 80 cents all day long. So I skew much more heavily towards having some kind of take rate out of the gate, and then with visibility to improving that take rate over time. The marketplaces that we've invested in to date they've all started even at the seed stage with a relevant take rate. Now, like, I think you're going to see this a lot is like take rate's not going to be the only sort of revenue stream for these businesses. And I think over time, particularly in some of these materials based marketplaces where you might even have like commodity risk, like in the example with Reibus, you want to diversify your revenue streams. Take rates are great. They're really unpredictable. So as you get further down the road, investors have a hard time forecasting your business because you start every day at 0. So if you do add other revenue lines, if you do add things like, so at Reibus, we have a financing offering now. We've also rolled out an entire basically like digital freight brokerage for these like specialty like flatbed trucks that they use to move these massive steel coils. So these are all new kind of ancillary revenue streams that have much more predictability behind them. Another one you see often is like people building this workflow software or having an API that plugs into your inventory management system. I mean, these are all things that we're starting to see that ultimately are value add and give a little bit more visibility. But to answer your question, I am a big fan of validating take rate in your market early on. I would even say validating it before you really start your marketplace.
Yeah, it comes up all the time in B2B marketplaces specifically. So I definitely wanted to kind of ask and get your take on that.
Yeah, and look, like there are some very large marketplaces today that are still trying to figure out take rate or operating on like a negative gross margin, but I don't see how they can have successful exits without proving to the market that they're capable of getting the take rates, unless there's some bigger play that they're, like a lot of folks will say we're going to do something with all of the data that we're collecting, or there's some other end goal. So there's totally kind of edge cases for this stuff, but I think on the whole, product market fit to me includes take rate validation.
Yeah, certainly. So you did kind of mention, additional kind of value add services such as financing, which also comes up quite often here in the community. So,
Mhm.
so for earlier stage B2B marketplaces, do you have any kind of input as far as, maybe how they can, in their pitch to investors, how they can clearly articulate, how they're going to sequence into that and at what stage?
Yeah. Um, I think it's going to be a little bit marketplace specific, but on the whole, I do feel like it's a really big undertaking, and um, I I think I would largely advise against rolling out a ton of the financing until you validated the marketplace and you have like pretty decent GMV or whatever you want to call, just like money flowing through your platform, because you really can't do much to monetize the financing of it until that happens anyway. So to me, it's a nice transition. I think a lot of folks start talking about it more somewhere between the Series A and the Series B. It doesn't always have to be that timing, but just from what I've seen across our portfolio, that's generally when they're reaching like pretty significant transaction volume on the platform. And I also think it depends on whether or not you're doing like credit card processing. So it's more like the high volume, low ticket size, or you're doing more like ACH and wires, because there's very different products for those two types of transactions. Also, if you're doing all domestic or you also want to support international payments, all these things add additional lines of complexity to what you're building. And I think it can be seen as a distraction if you haven't already validated the core of your marketplace.
Awesome. That's really helpful. So I know that's going to answer a few questions and maybe lead to some more here when we get into the group Q&A. So on the note, you did mention international. So are you investing, in marketplaces outside of the U.S. or maybe in emerging markets? Or
We haven't invested in a B2B marketplace internationally yet, but we do talk to them. I think there've been a lot of really interesting opportunities that keep coming up internationally, and we're totally capable of investing in them. So I think you'll see more of that in the portfolio in the next year or so for sure.
awesome. Yeah, so I'm kind of curious, now that we're going super deep into B2B marketplaces, are there any kind of misconceptions when it comes to B2B marketplaces that you've maybe recently
Yeah,
heard?
so I think as a whole, um, it's still, I think, even just a few years ago, there were very few B2B marketplace investors. And I'm sure everyone on the line knows that B2C marketplaces took off 15 years ago. And so I think they're starting to change for the better. But I think one of the maybe like lessons here is doing your homework and creating a short list of the investors who will be most likely to get it, like get what you're working on, and also will be like the most valuable to you in your boardroom, based on looking at who has already invested in B2B marketplaces. Because I think the folks who have done a lot of the B2C, they're going to have very relevant insights, but oftentimes like it's just a very different business. Your go-to-market strategy is very different. I think the requirements for what you build and the sequencing in which you build them are very different. Like the go-to-market strategy as a whole is just, everything about it is different when you're going to businesses versus going to consumers. And so, yeah, I guess my biggest guidance here is it is still in the early days. And frankly, even in terms of like successful, huge B2B marketplaces, we're still in the early days. Like you're just starting to see some of these going public or raising these massive rounds of funding. But I think there's actually like, I remember, I don't know, 6 years ago when we were talking about this stuff, that a large part of our memo was like, can these be big? How do you scale these? Does this really, can this be the new way for doing business in an entire market? Or are they always going to be sort of like a secondary option once you've already gone through your typical channel? Is this like was this a small sales channel that people look towards as like a backup option? Or can you actually become the predominant way that business is done in a space? And so I really think like there are many people for which the jury's still out in terms of, are B2B marketplace investments a good place to spend time? And so I think it's very relevant. And obviously, Bowery, we do a ton of B2B marketplaces. There's some folks that we love to co-invest with who do them a lot as well, like Point Nine, Nosara Capital, which is based in the UK. FJ Labs is a very big marketplace investor. So is Bessemer. So there's more out there, but just those are a few that come to mind that we like to collaborate with and who we think have spent a lot of time, particularly on the B2B side of things as well.
Yeah, that's great. We got a lot of head nods during that. So that's definitely something that's quite challenging and comes up in the community is with, we do founders fundraising meetings on Fridays at Levi Leads. And, some of the constant kind of input that we're getting from founders is that, there's a lot of, I guess, like misunderstanding around B2B marketplaces when it comes to some investors. And then, even the founders kind of have to educate them on the market. So.
Absolutely.
Awesome. So we're going to get into questions here in a little bit, but so you have some pretty incredible experience when it comes to B2B marketplaces, and then not only that, but also your operational kind of experience in the past and now investing. So do you have any kind of tips that might be helpful for early stage B2B marketplace founders that are fundraising right now?
Well, I mean, one of the best tips is doing your homework and finding folks who have spent time in B2B marketplaces. I think you're far more likely to not spin your wheels or waste your time talking to folks who are still getting up to speed. But it's not to say that people aren't becoming more open-minded to it. And just because they haven't done it before doesn't mean they won't do it now. But I think if you're just trying to optimize, for a successful outcome, making sure you are talking to some of these people is very important. I think particularly in marketplaces, I kind of touched on this before, but like the founder should be an absolute expert in the industry and have had a ton of previous experience where they sat through how this market transacted before, before they decided to build a marketplace, understand every unique element of the industry. I think especially when it comes to an industry specific marketplace, like I personally care a lot about the founder having spent the bulk of their career there. But I think messaging and how you articulate your depth of understanding is kind of like a make or break conversation for you. And then I will add to that, and I think a lot of investors will say something similar to this. When you are articulating how the industry works, your ability to kind of flex up and flex down based on how much the investor you're speaking to knows about your industry is like a great signal of, are you able to articulate to an audience that doesn't understand it? Can you kind of teach your industry to somebody in 30 minutes? It's really hard. But like that was one of the first check boxes for me when I met the Reibus guys and I knew little to nothing about steel coils. And I flew down to Atlanta. I sat in a room with John, and he gets up on the whiteboard and just draws out the entire flow of how it works today and the entire flow of what this marketplace would do and why it's relevant. And to me, if you can lay out that framework for an investor, they don't need to know anything about your industry then. They'll go and validate it, and they should. But if you can articulate it in a way that anyone can understand, it just, to me, it's just like says so much about who you are as a founder, your ability to, it even like, for some reason for me, it even like gives me a good insight into your ability to hire people, especially if they're people who aren't in your industry, and getting them up to speed, and just your ability to like lead a team. I think it all gives some signaling based on how you're able to teach an industry that people don't know well.
Yeah, that's a really great point as far as, not only the teaching, but also too that kind of being a indicator for ability for hiring too. So cool. So we're gonna get in questions here. Let's see. Hey, Nishant, did you have a question? Want to jump on?
Yeah, hi Loren. Super
Hi.
interesting insights so far. Loren, my question on B2B marketplaces is related to like the sales cycles. And I understand like being a founder, sort of knowing the industry is one thing, but when rubber meets the road, the whole sort of demand gen of B2B and long sales cycles seems to just make it so much more difficult than maybe on the
Oh
B2C
yeah.
side.
Mm-hmm.
Um, Any thoughts on sort of what could be some interesting things you have seen in your portfolio companies, or something that uh, could help sort of super early stage create demand? Would be super interesting to know. Thanks.
Yeah. Um, so I've seen a couple of different things, and I don't have a view yet on whether the sequencing I'm about to talk to, which one actually wins. I think it may be different depending on what kind of marketplace you're building. But let me say this, I've seen some people start with software, start with some kind of value add product that gets people to sign up with you, and the end goal is a marketplace. And then I've seen some people do it the opposite way and start as a marketplace with an end goal of building additional value added services or monetizing the data or what have you. Um, I don't believe that one is winning and one is losing. I think they're both relevant and they can both work depending on what you're building. If you are starting with the marketplace, like I tend to lean towards focusing on supply, particularly if it has to do with supply that you are validating in some way, whether it's quality or what have you. I just find that it arms you with the data points you need to go talk to folks on the demand side. And I'm not saying like spend years building up supply. I'm saying like you start your business and you need some supply out of the gate to have constructive conversations on the demand side. So, and then if you do go the opposite route, so like if it's the type of industry where even getting supply to agree is challenging, then I think perhaps taking more of a software or SaaS enabled approach initially may make more sense. So like I've seen if there's a massive pain point in an industry that has to do with managing of their inventory, and if they can't even list their products on your marketplace until they know what they have, great opportunity for you to build something on the software side that one would allow you to have real-time information on inventory levels, but two would then enable these businesses to be able to sell on your platform without basically doing anything on their side. I mean, like Reibus has gotten to a point where many of the folks who have their supply on the platform, they are connected through an API, and they look at Reibus as an optimized sales channel for them. That typically, while Reibus takes a fee based on the transactions, all of the expenses, Reibus also handles like all the fulfillment and delivery of the products, right? And so once you bake in all of those costs, it is oftentimes a better a solution where they can actually make more money selling through Reibus than they can selling through their own sales team. So that was kind of long, but does that give you a little bit of what you're thinking? Okay.
It does. Thank you so much. Thanks.
Yeah, sure.
Yeah, that was great. Thank you. Hey, Stacy, do you want to come on?
Sure. Hi, Lauren. Thanks so much for chatting with us today. You said something really elegant earlier about differentiating between whether a marketplace is the new way of commerce for a specific sector or versus whether it's a more targeted sales channel. And I'm curious, you started to touch on this in the answer to the last question, but if you could expand on that, what signals do you look for and how do you evaluate that to know, is this marketplace the future of this sector?
Yeah, and that's a really hard question. Part of a big part of the validation for me is talking to people in the market today. I'll talk to, if it's possible, current customers, but I also spend a lot of time talking to people and frankly getting more valuable insights from people who are not current customers. I think a lot of times when you're looking at a very legacy kind of vertical like steel, one great indicator is like, how is business being done today? Like, if they're over there using Atlassian and Trello and Salesforce and a bunch of these other tools, if they've got like a deep suite of software tools, you tend to believe that they're also running a relatively efficient sales cycle, sales process. And also like another really great like indicator of like how legacy the industry is how they're doing payments. And so I think when I dig into these, like taking Reibus as an example again, they physically mail checks in this industry, and everyone is calling each other to sell the steel. And there's almost no pricing transparency in the industry, despite it being a commodity. It's calling up your buddies and the guy that took you to steak dinner 2 weeks ago. So in that case, like, it's just becomes pretty obvious to me that there is this opportunity to be an extension of a sales team for your customers. Now, I think if you do get into a more like sophisticated market, you need to be even more focused on what makes your marketplace better than how they could do business otherwise. And obviously, like I talked about this before, but like some kind of economic impact should still be there. But then I almost focus more heavily on the value add components outside of it that you can bring to the table that they otherwise couldn't. Like when you get to just, I think it's really hard for me to get excited about an opportunity when you say you're displacing brokers when you just become a broker yourself. Like tech-enabled brokerage is great, but like the defensibility for a model like that is just really challenging. Does that help, Stacy?
Yeah, that was perfect. And also some of the things you said, especially about payments, I'm in the healthcare space. I see that firsthand. Yeah.
Oh gosh, I bet.
Awesome. That's a really great question, Stacy. So, hey, Maxine, do you want to come on?
Yeah, Lauren, thank you so much. This has been super insightful. I have a question about maybe just even applying Reibus's first B2B sale. If you got an insight on how they approached their first client, how they negotiated that price, how they charged, and how long it took to onboard them, facilitate that before they were able to go after their next kind of B2B client.
Mm-hmm. So I don't remember who the exact first customer was, but all of the founding team come out of industry. And so this may be relevant to some other folks on the line, but because the steel industry is so old school in a lot of ways, Reibus, one of the big risks we had to underwrite to when we met them was, does this industry want to go online? Will they transact online? Because they're so comfortable being on the phone. And so a huge part, I talked about this a little bit in the very beginning, but a huge part of what needed to happen in order for Reibus to really take off from like a growth and traction perspective was building that trust in the industry. And so I understood when we did this investment that we were going to have to do some things that were not scalable in the early days to build trust that would ultimately feed an engine that would allow us to automate this industry. And so one of the big things was like, we were using our software ourselves. Our customers weren't using the software yet. It was a great way to, one, validate that the software works and it's good. But two, we kind of learned like it basically took 3 phone calls, and by the 3rd call, you could get these people to actually use the platform. First, it was like, we'll handle your sale for you. What are you trying to sell? Great. We'll find a buyer for you. Like it was just a brokerage, right? Then we said, hey, by the way, we've got this really cool software tool. Like it was best to send it to buyers first and say, what is it that you look to buy? Because in the steel industry, they're buying the same thing all the time, just a different sequence, like different times. And they'll buy based on how much cash they have, based on their forecasted needs. And then there's always like a significant part of the market that's kind of misforecasted. So there's a lot of last minute purchasing as well. Spot purchasing is what it's called. But anyway, we would go out to the folks who were looking to buy and say, like, would it be cool if you basically got kind of a push notification when product that you're looking for became available on our marketplace? And people were really interested in that. So that was like them getting a taste of what software could do to this industry that they otherwise may or may not see an email, may or may not get like a super long, completely uncurated list of steel products where, like, with the amount of different specs that any piece, there's like 30 different qualifying items for any steel that you're selling. It just becomes noise in your inbox. And so it's kind of the very first time this industry could generate a curated list based on what they care about. And that was like a big part of what got people comfortable using the technology.
Amazing. How long would you say that process took?
Like I said, it was kind of like customer by customer in the early days. Simultaneously building up this brand because it's this anonymous marketplace. As folks became more familiar with seeing the Reibus name and having them deliver on what they said they were going to, and providing way more transparency these people are used to as well in terms of where your product is, when it's going to get delivered to you, actually delivering on what they say they're going to. I mean, these are all things that, like, in this industry are rare. So you're simultaneously building up trust. Meanwhile, you're working with some of the most respected brands in the industry who kind of give their nod of approval to Reibus by working with you. And doing that sort of hand-to-hand combat on the first few customers that we were very specific and tailored with who we wanted to use the platform, and doing that kind of 3-step sequencing of, we'll do it for you, we'll kind of do it together with you on screen share, to like getting them to use the product, was all kind of running in tandem. There are still customers who we may do an initial call with and then get them to use the platform, but it's also like they've built and improved upon the product so much since the early days. It's become something that these people are used to. It's a product that is very similar to their consumer life and experiences and the apps that sit on their iPhone. So I think that's a really big part of it too.
Amazing.
But like an exact timeline, I apologize. It's hard to say because it's ongoing.
Yeah. No, makes sense. Thank you.
Sure.
Yeah, thanks for going a little bit deeper on Reibus. So we might have to ask for an intro to the founder to have him on, since it seems like there's a lot of interest.
Definitely have somebody from the team on over there. They're phenomenal and would be able to go even deeper than I am today.
Yeah, would love that. So, hey, Joshua, do you want to jump on?
Yeah, for sure. Hey, Loren, thank you so much.
Yeah.
What are some go-to-market strategies you've seen with successful B2B platforms?
I mean, it's a little high level. I think it's very specific to the company themselves and the industry. I would say what we do look for is we're very specifically looking for at least an idea from the founder based on how deep they are into this industry and how well they know it, of why whatever it is you want to do makes the most sense here. So like I just went into a lot of the go-to-market with Reibus in our last conversation with Maxine, and I just think they knew so much about the type of buyer. They knew so much about the fact that we would have to handhold out at the gate, and that there would be some things that they acknowledged were not scalable, but would get the marketplace off the ground and get that flywheel to start working. And so a lot of what I am asking for from founders is some articulated strategy that signals to me how well they understand their industry. It's really hard for me to go into more detail without, spending more time with you specifically. But I would say it's a signaling question that we spend a lot of time on.
Hey, Joshua, did you want to share a little bit more about what you're working on? So that way she has some context.
Yeah. We spoke before.
We chatted.
Yeah.
Oh, okay, cool.
Yeah.
So awesome. Yeah, Josh and I also went kind of deeper last week on what he's building. So cool. Let's see here. So hey, John, do you want to jump on?
Yeah, thanks, Mike. Hey, Loren, and this is actually a really great, fun session. So, just context: the marketplace that I'm building is in technology services, IT services, and the like. But the question I have is, and you touched on it a little bit earlier about kind of the types of investors to go after, people that know marketplaces. But obviously, there's a lot of companies out there. Most B2B tech investors prefer SaaS models. And so the question I have, actually I have two questions, which is, the first one is, do you have any sense or preference or kind of thesis around subscription, led marketplaces versus transaction-led marketplaces in terms of where the primary source of revenue is coming from? And secondly, in a long transaction model, like what we have with like long-term projects and staff aug and all of that, how do you talk about that in the context of it? It's not actually subscription revenue, but it's long-term pseudo recurring, but it doesn't have the same flavor of a recurring SaaS business model in terms of retention and churn and so on. So it's a two-part question, kind of complicated, but it's really about transactions.
Let's talk about the first part first, and then let's talk about the second part.
Yeah. Transactions versus subscriptions first. Yeah, thanks.
Yeah, okay, cool. So I guess on that one, my viewpoint, and this honestly applies to B2B SaaS broadly, is that I think the world is completely going to shift to usage-based pricing. Like there are so many frustrated software buyers today who are paying basically a flat fee. It's like the same thing as a licensing model. It's just divided over 12 months. And yeah, sometimes they're on like a per seat basis, right? But that's not usage based. They've got some people who maybe log in once a year, and they've got some people who log in 10 times a day, and they pay the same amount for them. And it's very frustrating as a purchaser. And I don't think that's going to exist anymore because the competition is so fierce. That's been a winning strategy for people to actually take business over these days. And so even when it comes to marketplaces, I almost see even less of a rationale for having a just pure subscription model that is in no way kind of tied to the value that they are receiving from your product. Like, I want value and usage to be directly tied to how you price your business, no matter what kind of business it is. So does that help answer your first question? Okay. Let's go into your second one. Give me a little bit.
So that does answer my question. And by the way, sorry, Mike, with your subscription-based business.
This is different use case.
Different use case, completely different use case altogether. So that's a very interesting reply, and we'll see how it shakes out. Most investors, I imagine, don't share your viewpoint on that. But kind of switching off, we have long-running transactions. People are buying, multi-month or even open-ended services through our marketplace, where we don't know when it's going to end. We assume it'll end at some point, but could be 1, 2, 3 years, could be 6 months, right? Mm-hmm. But it's a consumption, right? It's a transaction. I'm buying a team. I'm getting a project done. I might have ongoing work, or I might be doing staff aug, as an example. So, how do you think about long-running transactions versus short, one-time transactions like shipping a product? And is there a way to articulate the value of long-running transactions in a different way? Because I'm struggling a little bit with that in my pitch deck.
It's really hard, I guess, is the shortest answer. And we do have some other businesses like that in our portfolio. We have a business called Electric AI, which is sort of, a help desk IT's like automated support, but they also have a bunch of humans. And sometimes they also work with like managed service providers to deploy people. And so, sort of sounds like there's some kind of overlap to what you're doing. And some of these are open-ended. You don't know how long the agreements are going to last for. So we're working through this, and I don't have all the answers, but I'll tell you, like, some things that we think through is, I think, looking at your business from just like a 12-month run rate, like the last 12 months and what you did, is like just a clean way to look at how much revenue you actually generated. When it comes to like forecasting your business or talking about the future cash flows, we have done a few things. One, we've said, okay, they're paying us this much today. It depends how much data you have, right? Because you can start to really refine this. But we've said, most customers on average stay with us for X months. So we suspect that we'll continue collecting revenue from them until X date. Some people do that just blank, like it's always going to be, let's just call it 8 months. Some people, like in the early days, you can kind of predict based on what you're actually doing, and you have like not so many customers that it's an impossible exercise. So you're actually like taking a subjective approach to how like the lifetime value of your customer, until you have the data to like make more sort of average assumptions. But what we've done is, there's also like, you may be familiar, so there's like ARR, right? Like just recurring revenue. There's also like a term that's becoming more popular, especially for folks with long sales cycles, which is CAR. So like contracted annual recurring revenue. Now that's usually more used for when you have a long implementation cycle. So like we've got people contracted, but they're actually not going to wire us money until the implementation is done. But there could be like a similar metric that you could use to speak to kind of you could call it even just kind of ARR, but define it differently. And it's just simply, if these customers were to continue to pay, this is what our annual recurring would look like.
Yeah, it'll be ARR with a slightly different churn and NRR shape. Won't have the same shape, but it's
Totally.
Still, yeah, I got it. Okay.
Yeah, I think you almost have to spend more time thinking about like how you're going to define churn. That's a really tough part of an equation where you don't know like when you don't suspect these customers to pay you in perpetuity, do you call them churned, or do you call it the end of an agreement? I mean, this is the kind of thing you'd probably spend an hour talking, probably multiple hours talking about it in a board conversation, but I'd be happy to chat with you more about it if that's helpful.
Yeah, I'll reach out to you. Thanks, Loren. Appreciate it.
Sure. Yeah.
Awesome. Well, we definitely brought out the all the B2B founders here with all the specific questions. So, thank you so much for taking the time to join us today. This is a really great conversation. I had a last kind of question for you before we wrap things up. If you were to go back before you got into the world of marketplaces and specifically B2B marketplaces, what would you tell yourself about them?
Oh, good question. I guess I probably, like every other investor out there, did approach these industries with some skepticism out of the gate. Because most investors invest on precedent, right? And you invest on, people say like, they're using some kind of, pattern matching. And so you're not doing that when this sort of new concept is coming to a market. And so a lot of the validation that I went through was just meeting tons of B2B marketplace founders, some of which I really wish we would have actually invested in. But I was still refining like what I thought would be successful here. And it's taken me a long time to get to the point where like some of the framework that I mentioned on today's call was how I validate opportunities. I think I'll keep refining that. I don't think I have all the answers, but I do think that continuously actually spending time thinking about what makes each marketplace successful is what will help me become a better investor and a better board member. And I'm very focused on doing both of those things. And I do think it's different for every business. Like for Reibus, if I had to pick one thing that I think has made them successful, it's being an anonymous marketplace. And it's because, and this is so industry specific, but there is just a huge lack of trust in the industry generally. Like people will just not deliver on what they say they wanted to do. The products won't show up. They'll send half of what they said they could get you. And so when Reibus was able to become a more trusted brand than a lot of the existing suppliers who have been in their industry for oftentimes like 100 years, that's just like a really meaningful wedge that I said, okay, that's kind of cool when I met them. I didn't think it would be like the driving factor. And I will say like the other part of what makes this anonymous marketplace so valuable is not only are you creating trust in an opaque industry, but it's also a brutally competitive industry. And people don't want to do business with their competitors. They can on Reibus without knowing it, right? You never know who you're buying or selling, who you're interacting with. And for their industry specifically, that makes a lot of sense.
Yeah, no, that's definitely a great way to wrap things up. I feel like almost every kind of point or topic you bring up could lead to a whole other hour conversation. So we'll have to cut things off. And I see some questions over here. So we're actually out of time, unfortunately. But if you have any questions, if you can just post them in the community, that would be great. And maybe we can continue the conversation there. So yeah,
I'd love to answer any other questions that folks have. So please feel free.
Awesome. Yeah, thank you so much. So you'll be our go-to B2B mind here in the community. So. Yeah, last but not least, before we completely wrap things up, time for a quick plug. Where can we keep up from you outside of the community? So,
oh gosh, I mean, I appreciate getting to meet folks like you and learning from people like you. I feel like I have a lot more learning to do in terms of marketplaces, and I think there's probably a lot of just unique insights that everyone on this call could share with me that would make me a better investor. But we're always looking for, founders who are really passionate about what they're building. We do B2B and we do seed stage, but other than that, like would love to continue conversations and build some relationships with folks in this network. So I very much appreciate you having me on.
Yeah, it's a real treat to have you join us here. So we're all marketplace obsessed. So
I love it.
Awesome.
You and me both.
Yeah.
Well, thanks everyone. It was so nice to get to chat with you.